Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Great to have you with us here at AusBiz. Let's get into it, see what happened overnight. US markets are essentially struggling for direction as the escalating trade war between the US and its key trading partners found investor uncertainty. Wall Street's main indices rising in early trade. The three main ones there swinging between negative and positive territory, but ending sharply higher after US President Donald Trump agreed to delay tariffs for 1 month on some cars built in North America. Shares in US chipmakers oscillated between green and red after President Trump announced plans to remove more than $52.5 billion in semiconductor chip subsidy law and use it to reduce debt. Shares of US car makers recovered ground after a significant sell-off the previous session on the tariff delays for some vehicles built in North America, with GM moving 7% higher. US listed shares of global mining giants Rio and BHP also gaining, tracking the rising price of copper and a weaker dollar. And shares of the gold miners also rising, tracking a lift in the bullion price, while shares of US shipbuilder Huntington Ingalls rose after President Trump announced plans to create an Office of Shipbuilding and offers tax incentives. Alphabet shares, they pushed higher after the Google owner launched an experimental AI-driven search engine that replaces traditional links with AI-generated summaries. And shares of Medallion Financial jumped after reporting fourth quarter profit above Wall Street expectations. Well, the White House says Donald Trump will exempt car makers from his 25% tariffs on Canada and Mexico for 1 month, as long as they comply with terms of an existing free trade agreement, adding that the president is also open to hearing about exemptions for other products. Meanwhile, US businesses have rising concerns about President Trump's tariff threats. That's according to the Federal Reserve's Beige Book, the economic summary mentioning tariffs 45 times, in fact. It's also revealing US economic activity has risen slightly but unevenly since mid-January, with employment nudging higher and prices increasing modestly. Investors also digesting the ISM survey, which showed the US services sector activity stood in expansionary territory, higher than expectations. US private payrolls increased by some 77,000 jobs last month after an upwardly revised 186,000 gain in January, according to the ADP employment report, and trade is now focused on the non-farm payrolls later in the week. US Treasury yields have climbed, reversing earlier declines as investors gauge a mixed bag of economic data and navigate uncertainty surrounding Donald Trump's tariffs. The 10-year up to 4.27%. And the US dollar slipping around 1%, the US dollar index that is, to its lowest level since early November. And the Aussie climbing to 63.3 US cents. And Bitcoin is at 90,000 thereabouts US dollars, climbing some 3%. In terms of commodities, oil prices extending their losing streak after US crude inventories posted larger than expected build, adding to concerns about OPEC Plus plans to proceed with output increases in April, as well as those tariff tensions. Brent futures down almost 2.5% to $69 a barrel. Gold prices edged lower despite a lower dollar as investors held back from making large bets on US payrolls data later this week. And the price for aluminium on the physical market in the US has surged to a record high due to the looming threat of tariffs. All right, well, let's get into what we're seeing more broadly on US markets at the moment. Ira Epstein joining us from Linn Associates. Ira, very good to catch up with you again. Of course, it is all about tariffs at the moment. What do we know, or what do markets know? I guess that's the key concern, is the uncertainty about those tariffs. How are markets reading what President Trump is saying?
Well, today's rally's a noise rally as far as I'm concerned. Notice that the president doesn't talk the stock market anymore. That's the first thing you pay attention to. If you look at Truth Social, how many times does he talk about the stock market? He doesn't. His goal has been stated. It's to break the 10-year notes, to get energy prices lower. It's to reduce labor amounts in the United States, and to break the back as best as he can on inflationary items. Okay, he's accomplishing that. We went down from a 4.8 level in the 10-year notice focus to just under 4.2 for the first time in months, many, many months. The second thing that has happened is the US dollar has reversed course from being a strong currency. And he talked about the fact that the dollar was too strong before he took office. Now it's down to the 104.5 level. Most currencies up sharply, especially the euro. He talked about making Europe spend for its defense. He's accomplished that to a degree, a large degree, in fact. And he's forcing Ukraine to its knees to accept some type of deal from that he engineers with Putin, not that they or Europe engineer, and nobody really has a way to stop that from occurring. At the end of the day, of course, Ukraine has to agree to it or not, but what are they going to do without the U.S. support? So it's a president that in 6 weeks has delivered on what he said. And if you're trying to be ultra bullish on the stock market, I don't think that's it. If anything, I think this president's engineering a slowdown in the economy, and it'll help him with tariffs, pay for the tax cuts he wants, get the Fed to support the market without him having to do increased government spending, lower the trade deficit. And I think those are his goals, and I've wrapped it up for you. I just did a report on it on my website that'll appear tonight, and I go through all that.
Yeah, what do you make of those latest exemptions, particularly for the car makers, Ira?
Well, first off, we do have a deal that if a certain percentage of a car is made in Mexico or Canada that contains U.S. parts, it is part of the USCMA, United States, Canada, Mexico. So that's the agreement. The A is the agreement. Absolutely. So it was not unexpected. Also, the U.S. car makers have been crying, this is going to put them out of business. A 25% increase on a car. So you want to take in a truck for $80,000, and now that truck's going to be $96,000 to $100,000. People aren't going to buy it. So this was coming. It was meant as a show, and I don't think that 25% will hold up, by the way. It was meant as a show that he can do this, he will do this, but as fast as it's on, it's off. This is the second time around he's done it, and he's sending a message to everyone that the reciprocal tariffs are coming, and if you don't do something about them, they're going to come at you and come at you hard. That starts April 2nd, and it's going to get very nasty from that point, which tells me it's a difficult time to be looking for new highs in the stock market, but an excellent time to be looking for hedges against what's going on, and gold is proving still to be that hedge.
All right, so that's where you want to be. Let's talk commodities then. So you're still liking gold. What are you seeing with oil? You mentioned earlier there that President Trump obviously he wanted those oil prices to go down. That is happening right now, in fact. Where is it going to?
Maybe in the 50s before it's all said and done in the U.S. Probably the low 60 area could happen in the Brent. Why not? Let's face it. OPEC has held back, and suddenly they want to start producing now 100,000 barrels a day or more. That's the beginning of the opening on this. So he's got them to join into his party. They want to grab something. They've lost tremendous amount of market share to the U.S. I am not convinced with oil prices going down that this drill baby drill that he's talking about from the U.S. producer is going to happen. Our technology can make more oil come from the same well. That we've proven and we're doing. But if you're buying that we're going to spend a lot of money going forward on that oil, we're not. And that's just the way it's going to be. I mean, the oil companies haven't been doing exploration. They've been spending the money on better technology, and that's how we become the world's largest producer. It won't last. That will fall back. But in order for the U.S. to get involved, because we have so much oil, prices have to go up, and we're not at that point at this point in time.
And Ira, just a quick view on China. I think eyes have been off China, in fact, given what's been going on with Europe, Ukraine, and the like. What are you seeing there, particularly, I see you pointing out there, just as far as its debt, it's unleashing that to meet that 5% growth target. What are you seeing in China?
Well, I've been writing that the Chinese debt is going to go up, and they did it. They're going to 4% of GDP, if not more. They're going to unleash a series of special bonds in order to get the economy going. They have to look inward because the whole world is looking at their model. Their business model is very simple. Let's produce, let's get the government to support all the production we can. Let's get that out of the country. Let's flood other markets, take over those markets, and eventually in time, that'll make us enough money that we're producing so much we can overcome and sort of get rid of the government supports that we're getting. Unfortunately, the world sees it. It shuts off other domestic markets and they turn on them. The United States is not going to be able, in my opinion, to make a deal with Xi anytime soon. I'll be very, very surprised if we're able to do that. It doesn't fit in. First of all, how can you trust them after the first deal they did with the US? And as soon as Trump was out of office, they didn't live up to the deal. So once burned, you know, Trump, he doesn't trust you the second time. Number two, it's not in our advantage to get a deal where we get their low price goods in. We're trying to bring manufacturing to the United States, not send it back to China. So I don't see how we possibly get close to China, let's say for the next year. I don't know beyond that. I don't have that crystal ball, but they're not on Trump's agenda. They can't be from all that he's got going.
It is a rapidly changing world under President Trump. Ira, thanks for getting us across it. Thanks for joining us from Linn and Associates.
Thanks for having me all.
Let's take a quick look at where we're likely to get going in just a minute or so as we get going on this Thursday, looking for a positive start with SPI futures up around 0.1%. And stay with us because we're going to get right across that in just a moment.